So hello, everybody. I am Dan, and I would like to introduce you to my friend Niko. And Niko and I actually have known each other for quite a while. He is one of the first people, and I think the first friend that I made in Japan. We are both of the Jewish persuasion. Yes, yes, the funny hats and the beards and all the acham and ocham and no pork chops, no sausages with pork, no
But
bacon.
we like money.
We like money.
Yeah.
And we're definitely going to stereotype, but we like money. And since we like money,
Yes.
um, yeah, speaking of money, Niko has been um, basically acquainting and now is actually pretty advanced in the field of what we in the biz call quantitative analysis, technical analysis.
Technical analysis, yeah.
And so with the help of Niko, I've actually also been learning how to read and understand what is going on when we look at the charts. So basically, there is a method to the madness,
There
and
is.
Niko understands what we're looking at. So he's going to give you a little bit of his expertise on in the field.
All right, a little rundown. Yeah. Um, just real briefly, technical analysis, we use previous price movement to predict future price action, right? We look for lines of support, lines of resistance, and we look for established patterns that might signal a move upward or below. And I just want to give you a quick visual. Okay, here we go. This is just, without going into any details, these are some examples of patterns that technical traders, pattern-based traders like myself, look for in price action in candlesticks. These work both going up or down, and they are valid in all time frames. I like longer time frames because they give me more confirmation, but they're valid at all time frames. Okay, so it's kind of brief look at that. To give you an example of an actual trade, I took this trade a while back on the Virgin Galactic. Actually, is the company. Their symbol is space, and I'm looking at price action and volume. That's what's giving me my information as a technical trader. Those are the two most important pieces of data that I like. And here I see one of my favorite patterns. This is a bull wedge where we see a compression of price action. And I actually made the entry. This is an hourly chart on space. And here's the 5-minute chart where I see kind of this elongation of the wedge. But I made my entry here with a stop loss here. And I hit my 2-hour mark in like 23 seconds of market entry. And it's based on this understanding of the previous price movement predicting possible price action in the future. Statistical probabilities are used here. Sometimes the patterns fail. It can peekaboo up, hit my entry point, and it stops me out. That's why I have a stop loss. That's why I don't mess with that. If I lose a little bit, okay, it's done. I move on. But if I go
I think,
on, go
I
ahead.
think, I think the important thing here is, is that, well, you look at this chart, right? So I was talking about the green bars and the red bars, right?
Yes.
So the average Joe like me looks at this and says, ooh, big green bar means it went up in price. It's money, 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 money. And then I see red bars like, oh my God, it's going down. Look at that big red bar. That means the price is going down. That must sell, right? Nope.
Yeah, a lot of novice traders say, "Oh, big green bar, jump in, jump in." Oh, here I get at the top of this big green bar. I think it has to keep going, and it comes down on me, comes against me. Or even this one, to see this, hindsight is 2020. So, oh, I should have entered here. Well, if I didn't have a pattern that supported my entry here, then entering here could have been a mistake, right? You can't know it. Entering here definitely would have been a mistake. But somebody who sees a green bar in formation thinks, oh, it's got to keep on going up, and then gets hit by a red bar, gets taken out. Or if they don't
Yeah,
have
I think
stop loss
I
in, they
think
lose even more money, right?
I have been fortunate, I guess you could say, in being able to accumulate. And one of the things that really saved me is myself cutting out this ability to just panic sell or panic buy. But it's really you cannot approach it like that. You
Right.
really have to be relying on on these probabilities and the technical analysis of what's going on because of what happens. For example, like what Nico said, you know, uh, you look at in hindsight is 2020. You look at it and you say, "Oh my God, I should have gotten in on that big green bar." Okay, why?
Yeah. You have to
Why?
have a reason. You have to have a
Why?
compelling reason to get into a trade. As a technical trader, okay, we talked about price and volume, but the most important tool that a technical trader has is his trading plan. I enter trades when this happens. I exit trades when that happens. Finished. And you follow the rules forever because the consistency of those rules that you set up is what gives you the advantage of statistical probability. If you keep on changing the way you trade every single time you enter a trade, you kill your capacity for building any kind of statistical help, right? Statistical advantage.
Right. Also, what kind of resonates with me sometimes are people saying this, "Oh, I got lucky. I got in and then it just went up." Well, the whole point is not to rely on luck, but to rely on actually something that's quantifiable. And it doesn't always get you moon, but um, you get lucky once, you get lucky twice, but then you're going to get unlucky.
Right? The way the trading universe works, to get into a good trade that it has a high probability of paying off takes a lot of knowledge and skill, but it's so easy to make a simple little mistake that loses you money instantaneously. And so what technical analysis does is it gives us this, like you say, a quantifiable method where we can build a plan that matches our own psychology, and that we can move forward with. Right. Let's take a look real quick at another chart. Some people might be familiar with this chart. Right. Couple days ago, about 10 days ago, I noticed right here what looked like a bear wedge, this price compression. And I thought, oh, yeah, the price here is going to go down. And we have seen it come down over the last 10 days. Little bit of a pushback and down again, right? So does this mean that this asset is not worth anything anymore? No, it just means that this is current price action and that we could see it coming right here. Did I know it was going to come all the way down here? Not really, but I didn't need to know. If it came here, I had my 2R and I was done, right? There's two emotions on this chart. Green bars are greed, red bars are fear. That's it. People are looking at their assets across the board. Like I'm not, I have some crypto exposure, but it's a small part of what I do. And I'm also into startup investments. I also trade stocks, right? So people are looking across the board at their assets, and there is concern about the economic stability in the short term here.
Also, something that I also look at right here when you're looking at this, right, is the tails that these particular candles form. These long, thin lines really show me, they tell me what people tried to do and what it ended up doing. So
That's right.
basically, a long line, a long thin line right here, right, means that there was an attempt to push it all the way down there. There was an attempt, but it didn't hold.
That's right. Buyers
Which
stepped in.
actually, yeah, which actually gives me confidence in seeing that this particular asset is strong.
We were talking when this happened. I thought it could go down, um, maybe another 5%, but it didn't. And yeah, there's a strong psychological barrier at that point, and we see that we're coming close to it again. And I imagine we're going to see. I mean, that's when we start to talk about price support. That this line we've seen this asset come down here, and it's very likely that if it touches this, buyers are going to step in and push it right back up. Will sellers then step in again? That's unknown. There's a couple big differences, and that big difference is volume. There was so much volume going on here. This was really erratic behavior. This has been pretty low volume. Slow but surely, the price has been coming
Yeah,
down.
and also one of the things about low volume versus high volume. Okay, so on low volume, things move slower and a bit more erratic. And that's what you really have to think about when you're looking at this type of behavior, because assets behave differently in large volume and small volume, obviously,
Yes,
because there's more people using emotion. Because what really drives really big changes is emotion. That's where these big moves happen, and that's where you get things like, for example, if something goes, what comes down must, what goes down must go up, what goes up come down.
absolutely. That's right. That's right. We see in any asset, whenever you see a parabolic move, if it's a, I mean, it really just takes off like crazy and has no time for consolidation. You can be almost guaranteed that it's going to hit that top and come almost all the way back down, if not at least 75% back down. I mean, there's going to be an adjustment. So right now, what we're seeing is even a retest of that bottom. And when you see that W, indicates a move upwards, right? Here we go. We have our downward, up, downward, W retest, back up again. So it's very likely that that can happen here, but it's also likely that it could turn into a continued, what we call a sell setup, right? So the opposite of this, that it keeps on going down again. Anyway,
and
these are all things that we can learn in
really
technical analysis.
and really one of the things that you really kind of think about is, so this is the behavior that we expect, right? And not always, but very, very often, if it doesn't behave like that, there is a reason.
Sure.
The reason is usually emotional, and it usually has to do with something else. So if it's not behaving like that, you look at the reason. What is the reason?
Yeah.
Would it be volume? Would it be news? Is there something going on?
Yeah. Buyout,
Could just
like
be,
in stocks, if there's
yeah,
a buyout, I always stay away from buyouts in stocks, because you never know what's going to happen with the price after the buyout. So, or mergers, I stay away from mergers. Okay, in crypto we don't have those things to worry about, but yeah, I tend to not watch the news. I tend to just watch the data, and I don't. Not all my trades win. Some of my trades I take a loss, but
it,
statistically,
it's never foul proof, but what you really do there is, if you kind of apply it, it's not magic.
no.
Because some people, including myself in the past, it seemed like voodoo. I mean, how do I mean, the market is the market, is this beast. How do you predict it? I mean, how do you do it?
Well,
Well, you can't always predict it,
there's lots of strategy.
but there is.
Buy and hold is a perfectly good strategy. Dollar cost averaging is a perfectly good strategy. My whole point here is that if we're going to talk about trading, if a group is going to be dedicated to the idea of trading, we have to give up these cultish ideas of, we're heading to the moon and we're buying Lambos. That's not how trading works. Trading is slow and methodical. Oftentimes it's not very sexy. And we have to be willing to make gains off a price action that's either going up or going down. And the only way to really be able to see that is by taking signals from the data that the market gives us. The data never lies. Our interpretation of the data might be incorrect, but the data itself never lies.
And really, I mean, I'm a big time hodler. I'm a big time hodler,
Good.
and I very much believe in that. I think that that is especially for somebody who might not have all this time to do this every day, might not have the expertise to do it, might not want to do it. That's a very strategy if you believe in the asset. But I think there's a happy medium between. So I don't just get into things I don't believe in, especially crypto. The assets that I own, I believe in them. I believe in the project. I want to be able to accumulate, but with that also to be able to support my belief in a project. And so what I do with that is I take what I have, I and then I design myself a trade strategy that will have with a long-term outcome. So my long-term outcome is not to just make money. Okay, money is nice, but ultimately what I want to be is be able to have is more of this asset.
Right.
Me personally, this
Right.
me, this is Dan. This is what I'd like to do. So, and I would like to do that without really injecting too much new capital in. I want to see what I can do with the assets that I have to accumulate more of this asset because I believe in this asset.
Well,
And
that's
that's
identical.
my strategy.
Hmm. That's identical to any forex strategy, right? When you're doing forex trading, you have currency pairs, right? Dollar versus euro. And if in that pairing, I will be when I'm shorting the euro, I'm simultaneously longing the dollar, right? It's and my goal might not to get money in the moment. My goal might be to get more shares or more tokens of a particular asset.
If you want to talk about that magic effect, the magic effect comes when, like I said, for me, I want to see more of my favorite asset in my portfolio. And whatever I do with the asset is to come back with more asset. And so when I come back and I basically, after this, the trade, the battle is done. And I come back and I scoop all my assets back up into the same, pile that it was in before, and I see that now this pile actually has more than it had before. And
Which is
that's my magic right there. That's like, oh,
right.
wow, I
And
didn't spend any money. I
that's
didn't spend any money. And now I have more of this asset. That's good
absolutely
for me.
absolutely. And that's where, when we see a parabolic increase in the price of an asset, it's a good idea to drop in a stop loss because it's going to come back down. And when it comes back down, it's going to come down hard. And there, at least there can be, even if that's the only thing you can save yourself the heartbreak of having an asset gain 50% and then lose it all the very next day and not have had the advantage of that gain because you didn't put in a stop loss. Anyway,
Because you can use that to get more of the asset. If you do that, you get out, you come back in
at a lower
and get
price.
more.
That's
Magic.
right. That's right.
Yeah.
So
Magic.
this
Magic.
these are all things that technical analysis helps me do. Um, you know, Virgin Galactic as a stock, I traded it. I've traded it a couple times. I've longed it. I've shorted it. The price action demonstrated that I could make a gain on the asset that I was interested in at the time, which is cash in that trade. But I didn't care about the stock itself. And so it could be that, yeah, from the opposite perspective, we don't care about the cash. We want the asset. We still need to trade against it. Right. So anyway, these are all ways that technical analysis helps with trying to predict these price movements before they happen. And I invite anybody to feel free to ask me any questions. Until then.
All right. I think we have come to the end of our program.
Yes.
Um, until next time, you stay classy, San Diego.
All right. Yeah. Be well and happy trading.